Hello, everybody, and thank you for joining. We're here today to talk about Ascent 430 in Wexford, Pennsylvania, a wonderful suburb of Pittsburgh. This will be the fifth acquisition, I can't believe we're saying fifth acquisition in Fund 4. Listen, before we start, we do this every time, but look, pause, read this, go to our website, download the offering memorandum, download the operating agreement, download the PPM, consult with your trusted advisors, your investment advisors, your CPA, whoever it is you trust to help you make these decisions. No one should be making any sort of investment decisions based on a 5 or 10-minute webinar. For those of you that I have not met, I am Ben Cotton. I'm the Vice President of Investor Relations with BAM Capital. I've been in business development essentially my entire life. The last 7 years, I've been part of $6 or $7 billion worth of multifamily real estate transactions, raising over $700 million in both debt and equity, all in multifamily. I love real estate. Alec, I don't know that folks have met you. Would you mind introduce yourself?
Yeah, for sure. I love real estate too, Ben. I'm Alec Bannister. I've been with BAM Capital for 6 months now as the acquisitions manager. I've done about 200 million in real estate transactions to include acquisitions and dispositions. I've acquired over 1,500 units, and I credit that to my strong underwriting experience, discipline criteria that aligns with BAM Capital's team.
No, and to add to that, so everyone knows, Alex is part of the acquisitions, dispositions, and refinance team, which is, headed by Tony Landa, who you've seen in previous webinars, Ryan Thie, who you've seen in previous webinars, and Derek, who maybe the folks haven't met him, but that your team, the team, underwrites 400 or 500 multifamily only deals that are specific to markets that we want to be in and are properties that we would want to own. They look at that many to find the 4 or 5 per year that become, BAM properties. For those that don't know BAM Capital, I'll give a quick overview. So BAM Capital has done over 1.3 billion in multifamily transactions, literally starting with one property, specializing in operations. We are an operationally focused business that buys, properties that you or I would live in tomorrow. These are, not senior housing, not student housing, not 1970s vintage that you put a bunch of money into and try to make look new. These are, so far in Fund 4, these are 2015 or newer properties that are just the best locations you could possibly buy in areas where we can take our people and do operations. Track record, if you gave us $1 million on the last 12 exits, we gave you 2.58 back in an average hold period of about 3.4 years. That equates to a 35.14% IRR, and that's net to investors. Over 125 employees and growing. We are very disciplined owner operators of great multifamily assets that quite frankly other institutions would love to have. So Fund 4, quick update, 5 assets now. We've got properties in and around Indianapolis, in and around Northeast Arkansas, Rogers, remember Walmart, and then now Ascent, which is Wexford, which is this amazing suburb of Pittsburgh. Let's talk about the property.
Absolutely. So Ascent 430 is located in Wexford, Pennsylvania, as Ben mentioned. This is a suburb of the Pittsburgh MSA, just north, known for its affluence and strong school systems. So location is everything here. 319 units, Class A asset, 2015 build, institutional quality, large floor plans relative to the market, and it sits on top of a hill that overlooks the comparables, the jobs, and the school systems.
Yeah, you said it. I mean, it's we can change a lot about a property, but the one thing you can't change is location. And it might sound cliche, but it probably will always be true. Location is the number one thing when it comes to real estate. So let's talk about why we love this location so much.
Definitely. Location is where we start. Before we start underwriting, location is where we start. So this is a prime location in the Pittsburgh MSA. So Wexford is located in the North Allegheny School District. It's the number 1 rated school district in the Pittsburgh MSA, the number 3 in all of Pennsylvania, and the number 27th in the entire nation. That's very unique in terms of available assets that we are looking at. The area of Pittsburgh, for those that are unfamiliar, it's very hilly. There's a lot of winding turns. The topography can be rough. That makes land suitable for real estate development difficult to find. So what you have now in 2024, within the last 12 months, the new development pipeline in Pittsburgh for multifamily has dropped 54%. That should highlight the lack of supply coming on in the next 2 years, makes assets like Ascent 430 very strong in a market with a natural barrier of entry. And then, to continue on, the employment options in Wexford, Pennsylvania, are really unmatched. Got a lot of medical and tech companies in this area. Allegheny Health Network just finished construction on a beautiful state-of-the-art hospital and wellness pavilion. It's employing 750 healthcare professionals, so it's high-paying jobs, and this is within a 5-minute drive of Ascent 430. So convenient access to this. Another major employer is University of Pittsburgh Medical Center, also located within 5 minutes. There's a number of facilities. Most notably, you have UMPC's sports complex, which hosts physical therapists, and then also the Pittsburgh Penguins team for training. So pretty cool. And then North Hill Industrial Park is also within 2 miles of Ascent 430. And you've got a number of companies, tech, medical, supply chain management, operations, life sciences, all within this industrial park. Plenty of high-paying jobs within the immediate vicinity of Ascent 430.
That's perfect. You've got the best school district in Pittsburgh. You've got access to high-paying jobs, and you're not 15 minutes from downtown as well,
Right.
And in an area where they're not making a bunch of new land to be developed. So this is hitting a lot of our non-negotiables, right? Great schools, access to jobs, population growth, and then a mismatch between supply and demand. This is literally hitting our non-negotiables. I kind of led into it, but what about the demographics? What about the income in the area, and some of the other things we look at?
Right. So I mentioned the wealth in this area. The median household income in Wexford, Pennsylvania, is greater than $130,000. With that, the median rent-to-income ratio, also known as the wallet share of income, is right around 16.5%. This makes Ascent 430 and the Wexford market an affordable place to live for a wealthy resident.
So now we're getting to the part where I always like to remind investors that the apartments we buy, you have to consider them like small businesses. And the goal with these small businesses is to significantly increase the net operating income. So that's the final piece of the puzzle, right? We start with location, then we start to look at our renter base, and then we go, okay, now that it's checked those boxes, it's checked our non-negotiables, what do we think we can do with our people? Remember, we have 125 employees. Most of our employees work at the properties. We have teams that their goal is to go in and be operation experts and increase the operating income. If we can't do that, we don't have any interest in the property. So talk to us about the numbers with that. What do you think we can do with expenses, ancillary income and even rent growth?
Right. So we took the trailing 12, the rent roll, and some other due diligence, and rolled it into our model. And we figured out that we can save upwards of $1,400 per unit in annual operating expenses just through our vertically integrated platform. With that, we also found that we have the opportunity to increase ancillary income by nearly $875 per unit. This just comes from efficiently managing utility billbacks and maximizing occupancy of garage units, storage units, just taking advantage of the opportunity that is already there. Rent growth, speaking on that, Ascent 430, we took a number of comps within the Wexford market and beyond that align with Ascent 430's unit type, unit count, Class A, all that criteria. We found two most comparable assets that are within 2 miles of the property, and they are charging on average 8.56% more in rent and than the in-place rent at Ascent 430. Taking that, we've discovered that results in about $160 gap per unit on average rent from Ascent 430 relative to its most comparable assets.
Now, this is you can't emphasize this enough. We're going to take a team from Indianapolis who's done this multiple times and send them to this property. Will they fix it overnight? Absolutely not. Give them 2 or 3 years, and we will significantly, 50% or more, increase the net operating income of this property. That's what we do. That when we talk about value add, that's what we talk about. And it's when an AC unit breaks, we fix it. When plumbing breaks, we fix it. We do everything ourselves. Keep in mind this, and you can talk about it when you guys started underwriting this. Typically, our best acquisitions come from buying from an out-of-state owner, right, that uses a third party to run the property.
That's absolutely right. So this is an out-of-state owner with an out-of-state third-party manager. They are not associated with each other, so we have the opportunity to go in there, like you're saying, with our team and run things the way that we want them to be run.
Yeah, it's literally true. Nobody loves your baby like you, and that's why we don't manage anybody else's properties, and we only manage ours. And our goal is to be literally the best property management business around, because it serves us and it serves investors. So let's do a quick financial overview. We get a lot of questions about the debt on the properties we buy. Could you talk about the debt on Ascent 430?
Definitely. So we're taking a $57.5 million loan from our lender, Merchants Capital. With that, we have a 5.67% interest rate that is capped at that amount. We are escrowing funds monthly to be able to purchase another interest rate cap at year 3 if we so choose. Otherwise, those escrow funds will be returned to us. So I really want to make sure that I'm loud and clear on the interest rate. Our interest rate cannot go above 5.67% years 1 through 3.
No, it's great. For a reminder for everybody, we like to match the debt to the strategy. And our strategy with this property is to significantly increase NOI over the next 3 to 5 years, and then have the opportunity to possibly refinance or sell. And so by doing this, by doing the caps the way we've done it, we've capped our interest rate at 5.67, which is a great interest rate when you're looking at bridge debt that could be as much as 8% or more. And then also escrowing, not buying, but escrowing for a future cap, which means we can return that back to investors if we want to, or if we need it, it's there. So it basically allows us to sleep at night, right? So we can execute the strategy. And yet make a change 3 years down the road without a lot of what they call defeasance. For those who don't know, if you lock in for too long, it's tough to change your loan in the future because you have to pay a lot of money to get out of that loan. We've basically kind of given ourselves the best of all worlds, if you will. So we talked about this a little bit earlier, but this is essentially the wallet share chart. So maybe you can talk about this real quick. I think, that star Wexford really puts a fine point on one of the reasons we love this market.
Right. So Wexford, Pennsylvania being in that bottom right corner of the graph, that's a good thing. 16.5% wallet share of income relative to a 130,000 median household income, which we mentioned previously. That creates a very strong market that is favorable for renters. And as we mentioned, Wexford is a very affluent area. So we have a very strong renter base in this location.
Yeah, great asset, great location, and it's affordable to live. It's important people understand once you get above 25, 30%, people start looking for other places to live. We've got a long way to run on rents if we need to. Yeah. Education, we talked about that. I could just put another fine point on it. We kind of hit these, but I think you said it earlier, or if you didn't, I'll repeat it. So Marshall Elementary, Middle School, and Allegheny, literally A+ across the board. You and your team underwrite hundreds of properties. Have you seen all the schools from kindergarten to high school graduation A+?
Not in my time. This is very unique. This school district, we highlighted the rankings across Pittsburgh MSA, Pennsylvania, and the country as a whole. Creates a very attractive market. And I just want to reiterate, if you live at Ascent 430, you're able to send your kids to A+ schools. That makes Ascent 430 and Wexford in general a very attractive market for families, the types of renters that we're looking for.
We hit some of this in other webinars. Obviously, when we talk about Knox, the development project that we're doing, but anything to add on this? We've kind of talked about some of the places to work, but is there anything to add on this?
The only thing to add here is UPMC with that University of Pittsburgh Medical Center. Their sports complex is just north of Ascent 430. They employ 92,000 across Western Pennsylvania, so a major employer in this area. And there are a number of facilities that are within Ascent 430. And I will say that I also want to mention the airport. $1.5 billion project to add a new terminal, state-of-the-art terminal at Pittsburgh International. The airport is within 25 minutes of Ascent 430, so residents benefit from that as well.
Yeah, and this is a map kind of showing where it is. Anything to point out here?
Bradford Woods, you see just south of Ascent 430. That neighborhood right now, home values are above 470,000. That is, significant evidence of the wealth in this area. And then also you see Marshall Elementary and Middle Schools right next door as well. Short, within 5-minute drive of the property.
Yeah, and to give people an idea, I mean, if you want to buy a home in this area, your monthly expenditure is going to be 2x what it is to live in Ascent 430. So I can already tell you we're going to have a few questions, and the number one question we're going to get is, why are we going to Pittsburgh? Maybe you can talk about that for just a second.
Right, and that's a great question. But I do want to make sure that we clarify specific locations within Pittsburgh. So we love Wexford. We love the northern suburbs, Wexford, Cranberry Township. And then on the west to northwest side, you have Moon Robinson out near the Knox development site. We love those markets, and that's where we are actively looking and seeing opportunities available. So we see that opportunity to scale, which is really important for our operations team. With that, there is a natural barrier of entry. We mentioned the topography in Pittsburgh, so it makes real estate in these areas extremely valuable. highlighting the lack of supply coming online in the next 2 years just really strengthens existing real estate. The school systems, some of the best in the country, best within the state, best within Pittsburgh MSA. That is really important to us, and to reiterate, non-negotiable for us as well. This is an affordable market for the renter base as well. So you add all those together, that makes the Pittsburgh suburbs that we are looking in really attractive for us.
Yeah, and we talked about it earlier, so I'll hit it one more time. We're not going to do any third-party management. We're going to send a team that's done this in other markets there to be successful. So I love it. I think it makes a ton of sense. I think investors will understand it as well. So the other big question we'll get is, and we get this often, is, hey, as an investor, am I investing in this property or am I investing in the fund? So as a reminder, when you invest in Fund 4, no matter where you invest, the first property or the fifth property, you're equally spread out amongst all the properties in the fund. And as a reminder, if we're doing a webinar, that means we're adding a new property, and that means there's an opportunity to invest. There's times when you can invest, and there's times when you can invest. And this is a time when you're able to invest. So here on the next slide, you can learn more about us by literally just going to our website, www.bamcapital.com, or you can reach out to Andrew or Max. Both their email and their phone numbers are on here, and you can call and schedule with them directly, or you can reach out to any of us. We're always happy to talk about what we're doing at BAM Capital, myself, even Alec. But please make sure you take the time to go to our website and learn more about BAM Capital, what we're doing in Fund 4, and the other properties within the fund. Thanks so much for joining. Alec, thank you so much to you and your team for putting together this information for our investors.
Absolutely. Very happy to talk about the fifth asset and Fund 4.
Thank you.